Hello everyone, welcome back to our class 12 economics series. In the previous video we studied the value added method where we calculated national income by measuring value added at each stage of production. Today we will study the remaining two methods used to measure national income, the income method and the expenditure method. Before we begin, here is a question for you. Imagine a bakery sells bread worth 100 rupees. We can look at this transaction in three different ways. First, we can ask how much value did the bakery add? That is value added method. Second, we can ask who earned income from making the bread. The worker earned the wages, the shop owners earned profit, the landlord earned rent, and the bank earned interest. That's income method. Third, we can ask who spent money to buy the bread. That's expenditure method. So the same economic activity can be viewed from three different perspectives. If all three methods are applied correctly, they should give the same national income. Today we will learn the income method and the expenditure method with simple explanations, examples and board level numericals. Let's begin with the income method. Think about a factory that manufactures shoes. Different people contribute to the production process. Workers stitch and assemble the shoes, so they receive salaries and wages. The factory owner rents the building from someone, so the landlord earns rent. The factory takes the loan from bank to buy machinery, so bank earns the interest. After paying all the expenses, the business owns or earns the profit. Now think about a small shopkeeper who owns the shop but also works there every day. It's difficult to separate how much income he earns as a worker and how much he owns as a owner. This is called mixed income. The income method simply adds all these factor income to calculate national income. Notice something important. We are adding only factor incomes because they are earned by contributing to production. If the income is earned by providing a factor of production, that is land, labor, capital, entrepreneurship, it is included. This is a bold tip. Now let's understand each component one by one. First, compensation of employees. This includes salaries, wages, bonuses, commissions, and employers' contribution to the social security or provident fund. Whenever workers are paid for their service, it is included. Second, rent. Rent is the income earned by allowing others to use land, buildings, or other natural resources. For example, if a company rents an office building, the payment made to the owner is rent. Third, interest. Interest is the reward for providing capital. For example, if a business borrows money from bank and pays interest, if it pays interest, that interest is included because it's a factor income. Fourth, profit. Profit is the reward earned by the entrepreneur for organizing production and taking business risk. Fifth, mixed income. This is very common in India. Imagine a doctor running a private clinic. The doctor owns the clinic, also works there. Since it's difficult to manage wages from profit, we call it mixed income. Now it's a memory trick to remember this. It's called as CRIMP. C, compensation of employees. R, rent. I, interest. M, mixed income. And P, profit. If you remember CRIMP, you will never forget the components. Let's solve our first numerical using the income method. Suppose the economy has the following factors income. Compensation of employees 800 crore, rent 150 crore, interest 100 crore, profit 250 crore, mixed income 200 crore. Now what should we do? It's simple. Add all the factor income 800 plus 150 plus 100 plus 250 plus 200, that is 1500 crore. So the national income calculated using income method is 1500 crore. Here's a question for you. Suppose someone also gives you pension 50 crore. Should you add it? The answer is no. Why? Because pension is a transfer payment, not a factor income. No current production takes place in return for receiving a pension. Exam tip: in numericals, always check whether item is a factor income. If you see pension, scholarship, gift or donations, don't include them unless the question specifically instructs otherwise. Students, this slide is extremely important because CBSE often asks these points as 3-mark or 4-mark theory question. Many students know the formula, but they lose marks because they don't know what should be included and what should be excluded. Let's understand each precaution one by one. First, include only factor incomes. Ask yourself one simple question. Was this income earned by contributing to production? If the answer is yes, include it. For example, wages, rent, interest, and profit are all factor incomes because people earn them by providing labor, land, capital, or entrepreneurship. Second, exclude transfer income. Suppose your grandfather gives you 5,000 rupees as a birthday gift. Did you produce any goods or service for that money? No. Similarly, pensions, scholarships, unemployment allowances, and donations are transfer payments. They are received without current production, so they are excluded. Third, exclude capital gains. Imagine you bought a plot of land for 10 lakh and after 5 years you sold it for 15 lakh. The extra 5 lakh is called capital gain. Did any new production happen? No, it didn't happen. Only the market price changed, so it is excluded. Fourth, exclude windfall gains. Suppose you win 1 crore in a lottery. Congratulations. But from the viewpoint of national income, this money is not earned through production. So lottery winnings, prize money and similar windfall gains are excluded. Fifth, exclude income from illegal activities. As per CBSE syllabus, income from activities such as smuggling is not included in national income. Golden rule. Whenever you are confused, ask yourself, is this income earned because someone produced goods or services this year? If yes, included. If no, excluded. That one question can solve many board questions. Now let's solve a board level question together. We are given compensation of employees 800 crore, rent 120 crore, interest 80 crore, profit 250 crore, mixed income 150 crore, pension 50 crores. Many students immediately add all 6 values. That would be incorrect because before adding anything, identify which item is a factor income. Compensation, yes. Rent, yes. Interest, yes. Profit, yes. Mixed income, yes. Pension? No. Pension is a transfer payment, so we exclude it. Now add the factor income only. 800 plus 120 plus 80 plus 250 plus 150. That is 1400 crore. So the national income is 1400 crore. There is a board tip for you. In numerical, don't start calculating immediately. First, cross out the items that should not be included. This habit can easily save you 1 or 2 marks in the board examination. Now let's move on to the third and final method of measuring national income, that is expenditure method. Think about your own daily life. Whenever you buy a notebook, your family pays school fees. The government builds a road. Or a company purchases a new machine. Someone is spending money. Economists believe that if we add all the spending on final goods and services, we can calculate national income. So the formula is national income is equals to C plus I plus G plus X minus M. Now you would be confused, what are these alphabets? Let's understand each symbol. C stands for consumption expenditure. This is the income the money spent by households or on goods and services like food, clothes, electricity and transportation. I stands for investment expenditure. This includes spending on new machinery, factories, buildings and business inventories. Remember, investment in economics means creating productive assets, not buying shares for personal savings. G stands for government final consumption expenditure. For example, government spends money on schools, hospital, defense and public administration. Finally, X minus M means net export. Export are added because they are produced in India. Imports are subtracted because they were produced in another country. Memory trick. Remember the formula CIGX. C consumption, I investment, G government, X minus M net export. The 4-letter trick makes the formula much easier to remember. Let's understand these 4 components one by one. First, private final consumption expenditure or PFCE. This is the money spent by households on final goods and services. Example included buying goods, clothes, mobile phones, paying electricity bills or traveling by bus. Second, government final consumption expenditure or GFCE. This is government spending on services that benefit society such as education, healthcare, police, defense and public administration. Third, gross domestic capital formation or GDCF. This means investment in creating productive assets. For example, a company buys new machinery, builds a factory or increases its inventory. These investments help increase future production. Fourth, net export. This is calculated as exports minus imports. Suppose India export goods worth 500 crores and import goods worth 350 crore. Net export is 150 crore, that is subtraction of export and import. If imports are greater than exports, then net exports become negative. There is a board tip for you. Many students confuse consumption with investment. Buying a TV for your home is consumption. Buying a machine for the factory is investment. Always ask yourself, is this purchase meant for personal use or future production? This answer will help you classify it correctly. Now it's time to solve our first numerical using the expenditure method. Before we start, always remember the formula. National income is equals to C plus I plus G plus X minus M. Now let's identify each value. Consumption or PFCE is 900 crore. Investment or GDCF is 250 crore. Government expenditure is GFCE, that is 300 crore. Export 150 crore. Import 100 crore. The first step is to calculate net export. Net export is export minus import. Okay. Net export minus import, that is 150 minus 100, that will give you 50 crore. Now substitute all the values into the formula. National income is 900 plus 250 plus 300 plus 50, that is 1500 crore. So the national income using expenditure method is 1500 crore. Here's an important exam tip. Many students forget to subtract imports and instead add both export and import. That is incorrect. Always remember, export are added because they are produced in India, whereas imports are subtracted because they are produced outside the India. If you remember this logic, you will never make this mistake. Now let's discuss the precautions in the expenditure method. These precautions are frequently asked in CBSE board examination. First, include only final expenditure. Suppose you buy a new laptop for personal use. This is final expenditure because laptop is purchased by final consumer. Second, exclude intermediate goods. Imagine a bakery buys flour to make bread. This flour is not a final product. It is used to produce another product. So it is intermediate good and it should not be counted separately. Third, exclude transfer payment. Examples include pensions, scholarships, unemployment allowances, and gifts. These payments are not made for current production, so they are excluded. Fourth, exclude second-hand goods. Suppose you buy a used bicycle from your neighbor. No new production has taken place. Therefore, the value of bicycle is excluded. However, if a dealer helps sell the bicycle and charges a commission, the commission is included because it is payment for a current service. Fifth, exclude financial transactions. Buying shares, bonds, or debentures does not create new production. These transactions simply transfer ownership of financial assets, so they are excluded from national income. Memory trick, remember, FIT SF. F, final good included. I, intermediate good excluded. T, transfer payment excluded. S, second hand goods excluded. F, financial transaction excluded. This acronym makes the precautions easy to revise before the examination. Now let's compare all three methods in one place. This comparison is one of the easiest way to remember the chapter. First, the value added method. Here we calculate value added by each producer at every stage of production. It answers the question how much new value has been created. Second, the income method. Here we add all factor incomes earned by land, labor, capital, and entrepreneurship. It answers the question who earned the income from production. Third, the expenditure method. Here we add all the final expenditure on goods and service. It answers the question who spent money on the final output. Although these three methods look different, they are actually measuring the same economic activity from different angles. Think of a cricket match. One person watches from the stadium, another watches from on the television, and commentator describes it on radio. Their perspectives are different, but the match is the same. Similarly, production, income, and expenditure are three ways of looking at the same national income. There is a board tip for you. If a theory question asks why all three methods give the same result, write because the value of production equals the income generated from that production, which also equals the expenditure on the final output. This statement often earns full marks. Congratulations, you have now completed all three methods of measuring national income. Let's quickly revise. We started with income method where we add all factors income like compensation of employees, rent, interest, profit, and mixed income. Then we solved a board level numerical and learned the precautions such as excluding transfer payments and capital gains. After that, we studied expenditure method, where national income is calculated by adding consumption, investment, government expenditure, and net export. We also solved a numerical and discussed the important precaution to avoid common mistakes. Finally, we compared all three methods and understood they all measure the same income from different perspective. Here's a homework question for you. Okay, please note it down. An economy has PFCE as 800 crore, GFCE is 250 crore, and GDCF is 300 crore. Export 120 crore, import 70 crore. Calculate national income using expenditure method. Pause the video, solve it yourself, and post the answer in the comment. If this lesson helped you, please like the video. Before ending the video, there's a quiz time question for you. Comment your answer before checking the next shot. This kind of questions that generally come in CBSE board exam.